guys, April 23rd, 2019. It's a Tuesday, and the markets are starting to move. Things are getting exciting. Here's the top observations from yesterday, April 22nd, 2019. Big money is finally starting to move in the tech stocks. They've been sitting on the sidelines after they pulled them out of healthcare and other sectors, and now looks like they're starting to put them to good work here. We're seeing stocks like Netflix starting to move out of the trading zone, and we're starting to see Amazon making a move higher, but on very, very low volume. So we had two theories for Amazon. It was either going to sell off into the earnings or it's going to sell off right after the earnings. And right now, the second version seems to be more realistic. So topping trend continues. Most stock hesitate, move it higher, and pull back next day after the pop. Guys, this is a really, really awesome observation because you can put multiple trades, high probability trades, targeting smaller returns, but for the purpose of day trade, this is an incredibly, incredibly valuable observation because you can apply it to multiple stocks. And observation number 3 is stocks that do drop, they do continue the drop on second day. So here's two basic strategies. If you apply these throughout the earnings season, guys, you stand a chance to make an insane amount of money. You don't have to go for these killer returns of 400-500% right now because the VIX is super low. But if you target returns 50 to 100%, you can take 2-3 trades on any given day and lock these kind of gains if you focus on utilizing these strategies. And the 3 stocks for the day that we are considering actually trading is Whirlpool, ticker WHR, and a few other ones I'm going to show you here in the slides. So first, I wanted to show you how cool these observations really are. So this were the slides basically showing yesterday. I'm just going to show you the slide from yesterday and show you what happened the following day. So yesterday we showed you this slides before the market opened, basically saying that, look, when stocks do pop on earnings, they actually drop the next day. So here's, again, United Rentals. This was the slide that was shown to you yesterday. And look what happens the next day. So they do pop initially, and then second day, they go lower. Now, look at how consistent this behavior is. Look, we talked about yesterday about Johnson & Johnson, J&J. So 3 topping candles right here. What does it do yesterday? It actually makes a move lower. So a very easy strategy to use, right? When they pop higher, short them at the top, and they will drop the next day. Here's the next example. LVS, Las Vegas Sands. What does it do? This was the slide I was showing you yesterday. What happens after that? Look how consistent this is. Guys, it doesn't matter what the earnings are. Just focus on the behavior of what actually takes place right before we head into earnings, right at the earnings, and right after. Now, somebody, a member, was actually asking me a question. Okay, how do we, all the casino stocks are fixing to announce earnings, how do we use Las Vegas Sands to actually trade, for example, Wynn Resorts? Well, as you can see, first you take a look at the Las Vegas because this is what we have to go by so far. This is the only casino stock that report it so far. So using these observations, how do you actually trade Wynn Resorts? And the answer is very simple. Okay, so ideally, if Las Vegas kind of setting the trend for how the casino stocks are going to behave, Wynn Resorts should pop at earnings. And it should most likely pop to maybe this 145 area. But look what happens. This is 145. 145, if it pops from 140 to 145, you want to short it there because it will pull back on when? We already know, the next day. So there's no reason, guys, to be fearful. Some of you, I know, have some fears actually holding your positions overnight. There is no reason to be doing that when clearly the high probability trade, short at the top, the next day, they drop. Very simple strategy anyone can tap into and utilize. Same observation, again, SNA pops the first day. What happens the next day? What happens to the rest of the stocks that pop on the first day? It goes lower on the second day. Guys, this is some basic examples. If you look from what charts, you will see the same thing. Now, this one is a little bit more pronounced. PPG Industry, right? Pop the first day, black candle formation, black reversal candle, confirmation on the accumulation distribution while actually selling the stock while it's moving higher. What do we have? Boom. Look at this miniature head and shoulders, guys. How cool is that? First, it has a gap up higher, sell off happens, and then the next day it actually gaps lower. So right after earnings, pop higher, followed by a second day lower. Look how consistent this behavior is across multiple sectors. Now, clearly, we're observing that the big money starts to go into tech on April 22nd. Now, generally, this is actually bearish. Let me explain this. When stocks run up into the earnings, okay, it is a very safe bet for institutions to actually, especially if their earnings are good, to liquidate some substantial positions. And what we are noticing, actually, let me just show you the chart of Amazon, is it's setting up a really good stage for some profit taking. If you take a look at this longer time frame, there's clear divergences, right? The whole time Amazon's been moving from 1300 to 1887 yesterday. Look what happens to the drop off in volume. I mean, volume in the last week pretty much is non-existent in relation to the prior volume. So yes, they're moving the stock higher. Why? Because once the earnings are going to be announced, there's going to be some profit taking going on, guys. So don't be mesmerized by this green action in Amazon, because I would love to see it hit 2,000 so I can personally short the hell out of this thing at this level, because the big pullback will be coming. So signs of profit taken in semiconductor stocks. We've been watching closely AVGO. Actually took some trades on it. So what appears to be a perfect chart, guys, just look at this. Look how perfect. Accumulation distribution is perfect. MACD is perfect. Everything is bullish. Besides what? I mean, even your RSI is awesome, right? But they're moving higher. Look at this. They're moving higher on diminishing volume, and ultimately that results in a drop. So yesterday we took a bite out of this trade. Nothing huge, okay? But, you know, we got 2 days lower now, hitting 315. So we could see, we're going to be watching AVGO closely today to see if indeed there is something bigger happening. Maybe they are starting to come in and signifying the top in this semiconductor sector right here. Tesla is heading for a crash. We've been talking about it for the last 2 months, guys. The chart just keeps deteriorating, just keeps getting worse and worse. As a matter of fact, I forgot to put some stuff in the slides yesterday. I'm going to shortly mention this Tesla trade again, because there is not, I mean, look at all these blue dots. This is a gap down. This is a gap down. The stock moves higher. This is a gap down. Moves higher, pops, gap down, gap down, gap down, moves higher, gap down, moves higher, gap down, moves higher, gap down. Guys, the only other chart resemble this type of behavior is the chart of Bitcoin from the point when it hit 20,000 all the way to it dropped to 3,000. If you look at the Bitcoin chart in that time frame, it's going to look pretty much identical. Move higher, gap down. Move higher, gap down. This is incredibly bearish behavior. Now, what's notable, it seems like it's trying to hold this level around, 260, 250 historical is a really significant level to Tesla, but I think this time it will be broken. In many videos, we have pointed out, there's a lot of stuff we can talk about the Tesla. It's basic law of supply and demand, okay? No demand, sales go down. The company couldn't even make enough money. It actually couldn't be profitable with the sales skyrocketing, with the massive demand that initially was projected for Model 3, but now they're running out of buyers, so that's not good. So, the story that Tesla is the next step and all that stuff, I mean, it sounds beautiful, it's wonderful, but the chart is telling us that while they're saying that, institutions are actually continuously pulling out their money on any pop in the stock. So anytime it pops higher, they take the money out. Anytime it pops higher, they take the money out. Just when you think of Tesla, think about Bitcoin. That's where it's headed. There is a bigger drop in the making. And guess what it's doing this morning? The same thing it was doing yesterday, guys. Yesterday, Tesla dropped from like 270 pre-market to like 265. $5 drop pre-market. So when you look at the actual chart, on a multi-day chart, it looks like a gap down. So what looks like this today is actually going to be a gap down again. So this time from 264 drops down to 258. Now it's not surprising that it's 258 because 258 exactly was the level in Tesla that it visited 3 days ago. So it's revisiting this level, and the issue is nobody is buying this stock at these levels anymore. See, they used to come in and buy this thing at these levels, but there's no interest. There's no buyers here, which tells me there is a bigger drop in the making. Now, here's confirmation on stock that actually drops on earnings and continues lower the next day. And the stock is ISRG. So yesterday we're giving out a pretty thorough, detailed example of how you could have traded ISRG. So that was the longer time frame chart that pointed to a bigger drop. Top information. This is what the stock has done after earnings, right? This is what the stock was doing pre-market yesterday, hitting the level of 486. This is a very good illustration of how stocks will revisit the levels that they set, in the initial reaction. So in the initial reaction sets a low at 486. When we went over the entire trade, we said, hey, at the open, if it goes to 495, short it, because ultimately the first target level would be 486. Close half of your position when it hits that level. So this is what actually takes place. So here's your gap down. And as clearly we've determined over the course of the last week, that the stocks that do drop on earnings, they continue dropping lower after that. So prior earnings quarters, we've seen where stocks drop, they come in, they buy the dip. This earnings season, we see completely different. Most of the stocks, actually 80% of more stocks, they go higher in earnings, and then they stall and they move the second day lower. But the stocks that do drop initially, they have a tendency to not bounce. In other words, they're not buying the dip in the stocks that do drop initially. So your higher probability trade would be, if you see the stock drop, wait for a small bounce, get in the position, and wait for the lower levels. Now notice these drops are not huge. So yesterday, if you were taking this trade, this was the area where you could have shorted the stock on the bounce from that 490 level. We suggested waiting until 495 to get in, and actually went higher, went to 505 level, and then it dropped to, guess what, 486, 66. So it was 66 cents just above the level from where it established the low in the initial reaction after the earnings. Okay, so you could have easily closed half of your position profitably, and you could have done, could still hold the other half of the position if you are in it, because chances are it could make another run to 500 and then drop again to this level. But if there is no buyers, the only direction it could go to is lower. So the next level is still 475 in this thing. Now, here's the cool thing this morning, guys. All the stocks that are on the radar for this morning, announcing earnings pre-market: ABG, FITB, Twitter, Hasbro, Procter & Gamble, Lockheed Martin, Polaris, PHM, UTX. Guess what? There's only one stock that is down. The rest of them are up. So this earnings behavior is incredible. Okay, so if we use the analogy that we have already established so far using our sample data, the actual trade that anyone could be taking is this. I'm going to give you 3 trades that we're actually considering, and so one is based on simple observation that stocks that do drop, they continue lower, which would be Procter & Gamble, and there's 2 other ones that on the charts they just favor. Actually, this one is from yesterday, WHR, right? Because it announced earnings last night, it popped, and I think this one is going to have a high probability of a reversal, because it did, the chart, if you look at the longer time frame, it favors the reversal in this particular name. So WHR, Whirlpool, we're actually considering buying 150, 145 puts with a target price of about 138, 141 in the next 72 hours. So we're expecting a reversal on that one. Procter & Gamble, so it's down pre-market to a level of 104. We're considering buying 107 puts on Procter & Gamble with a target of 101 or 99. Here's how the longer time frame chart looks on Procter & Gamble. And the reason why we would be considering this 99 or 101 level, this is support right here at 97.5. Clearly, that was established not so long ago. I mean, look, another perfect chart. I mean, if you listen to CNBC, they would tell you this thing would just keep going to the moon. Look at this accumulation, right? It's so perfect. MACD, so perfect. It just keeps going. But what do we have here? We had a first bearish reversal candle. We have diminishing accumulation as far as volume right here. So there were some signs of deterioration, as perfect as this chart actually looks. So a pullback to 104 so far probably does not represent where the stock could actually head. Lower over the next 72 hours easily can hit a level of 100. So we're sitting between 101 and 99. So start taking your position out at 101. Keep the other one until it hits 99. Pretty easy trade right here, guys. Okay, and this one is Hasbro, right? So awesome results, awesome earnings. Everybody's pumped up and excited. The stock pre-market is up from $87 all the way to 103. And yes, we are thinking there is going to be a reversal here. Now, be careful with this one because it doesn't mean that it has stopped out at 103 as I'm recording this video around 8 a.m. You know, this one is actually, you know, it's got a potential to move a couple of bucks higher. Here's why. If you take a look at the longer time frame, right, here's this level. Here was this triple top formation, top 1, top 2, top 3. This top was created between, surprise, surprise, look at this level, 102.50, 103. That's exactly the stock is trading today. Next level is going to be 107. So this is why we're suggesting if you're buying puts, okay, expect that, you know, a smaller pullback is reasonable to maybe, you know, 100 level, and maybe possibly even 97. So what you want to do is you want to buy these 107 puts because the probability is going to move above 107 is not very high considering the historic chart here. And the probability that a stock is up on really not a significantly strong volume pre-market, but it's up almost, you know, $17 to, you know, for it to give up $5 and maybe finish the day plus, you know, 10, 11 bucks only. It's a reasonable estimate, right? So I think two people are getting too excited, but we're hitting these levels right here. So the point I'm trying to make is wait till it hits potentially after the market opens this 105 level, maybe 106, buy 107 puts as the stock does that, and expect the reversal all the way to maybe 100 level, possibly 97, 98. This is where the stock opened a bit higher than 96, so we're not expecting to drop below this level, but there is a good trade to be caught here, guys. Based on the simple observation, we're observing that all the stocks that pop higher, what do? The next day? They drop. So if this one moves to 106, right about the market open, buy 107 puts, wait for the pullback till the next day, collect the profits, close the position. Okay, market moves. Yesterday, on the 22nd, we actually had a move 4. That was a move that was expected because we had a probability of a move 3 or 4. The bulls take over the market again. Here's how this 4 moves. For those of you not clear why this was recorded as a 4, we had a sequence 7-4. This is how it looks. So in a 4, you're going to have a gap down. So just a lot of moves. Out of the 13 market moves, you're going to have about half of them that will start with a gap lower of some type. So the similarity between move 3 and 4 is the fact that on the move 3 and 4, they're both going to have a pretty significant gap down. Now, in a move 3, we're going to continue lower after maybe initial pop. And in a move 4, we're going to continue working and cutting these losses that were created with the gap down. And ultimately, we're going to cover most of them. But in this case, we still finished like minus half a point or something like that. So the point is, again, for those of you that are struggling for whatever reason recording these moves, always look at where the market opens in relation to the previous day. As you can see in move 7 prior day, we closed right around this area here. The next day we opened significantly lower, then we bounce, and see these 3 buttons right here. It looks like the market pops, but the gap is not closed yet, so it drops, making you think, okay, there is a reversal like in a move 3 or 2. But then it picks itself up, sets another bottom. And the more bottoms like this you guys see intraday, the higher the probability that the market will bounce at that point. Because as you can see, as it tries to make the second bottom and the third bottom right around these levels, the volume actually goes lower. In order for it to reverse and break lower, the volume needs to accelerate. So that's a huge difference and very crucial observation if you're trying to figure out how to trade the rest of the day. Okay. 5-day sequence, 12, 6, 2, 7, 4. This is how it looks on the chart. And we're getting to a critical level, guys. Today is going to be an important day because I think once we get to this level of 29.23, possibly 29.25, that's where you would expect the reversal. For those of you that are just trying to take directional trades, I mean, you really want to, you don't want to jump in at the market open. You want to wait till we hit this level because that's going to be your level of resistance. Chances are we've traded with lighter volume that we're probably not going to take this level out today. VIX review is VIX is low numerically and it's moving sideways. Again, continues closing bullish gaps that are being created pre-market pretty much each and every time, which is actually bearish. It's a move to like behavior. VIX range today was 13.3 to 12.7 to 12.4, which is another downtrend. And so the question is, where what does the VIX tell us about the market? Well, it tells us that the fear is just continues to diminish. Every time the fear increases pre-market, it subsides during the regular trading session. And so there's a lot of people that are just too bullish in the market right now. And so this bull could continue. However, as we can see, it's really easy to decipher some of these earnings trades right now because only a few stocks drop after earnings. And if they do continue lower on the second day. So it gives us a clear path to put some really easy trades together, guys. The next market move we're expecting today is a move 11 when we hit this level of 29.25. We expect a top and a possible pyramid on the reversal. There is a chance if they continue placing, and that is institutional investors continue placing money in the tech sector, that we will get a straight up one move. There is a chance if we go to the 29.25 and the reversal happens, it could result into a move 2. Key takeaways. Watch for the stock pops after earnings, guys, and be ready to short them at the top. The key thing here, guys, is to short them at the top. So that actually will create a high probability trade for you because they will drop the next day. Number 2 is high probability of a sell-off in Amazon, observing the current behavior. So if we see Amazon continue higher today on lower volume, it creates a very dangerous setup because once it does move into the earnings announcement, it will likely initially pop, but then we're going to have a wave of selling. So number 3, Tesla crash is coming. And if the bank stocks are done, which yesterday we actually had JP Morgan stolen, we had a lot of financial stocks are stolen. Netflix is facing a major resistance level at about 380, 385. If Netflix does not break that today or tomorrow, and Amazon reverses on earnings, expect a big reversal Friday or next Monday. With that being said, make it an awesome day. Trade like a rock star. I'll catch you guys in the next video tomorrow.